Let's take a quick look at what's happening economically. It's not just here in the US, but the entire globe is facing inflation, supply chain, and labor issues. So now the central banks fuel new bets on tighter money as inflation rises globally. Stubbornly high inflation across more wealthy economies last week prompted a shakeout in bond markets as investors began expecting central banks to quickly tighten monetary policy. And that's what we're expecting. We're expecting the Bank of England and other central banks to start raising rates and tightening the money supply. As the central banks are talking about tightening, what are the global leaders talking about? Well, they all got together in Scotland to discuss global warming. Steep cuts to carbon emissions gain stronger economic backing. How much would it cost to reduce global warming? 131 trillion is one answer. So on one hand, the central banks are saying there's huge inflation risks and we need to start tightening the money, and yet global leaders just want to keep spending money. In fact, Biden and his economic team are really working hard to pass through a social spending package around 1.75 trillion and then an infrastructure around 1.2 trillion. So we're talking about spending more money here in the USA also. And what are we going to do this week? The week ahead, we have a Fed meeting, trade and employment data coming out. What are we expecting out of the Fed? To say the same thing, that they had to start tapering the money supply, lowering the amount of money in the economy as government continues to talk about spending more money. We're also going to be looking at the employment data this week, and we're expecting the trade deficit to show a wider gap as we are producing less in this country and importing more and more goods because consumer demand is high. This is all bad for retirees, and it's very important that you keep on top of the data because a lot is happening. So make sure you subscribe, and we'll keep you informed.